In the world of international trade, even a single policy shift can send ripples across the global economy. Welcome back to the channel, where we break down the most pressing global issues and reveal their real-world implications. Today, we're diving into a major development in U.S.-China relations. The White House is reportedly considering a reduction in tariffs on Chinese imports after President Trump recently hinted at a potential de-escalation of the ongoing trade war. This move, if confirmed, could transform the economic landscape and reshape international trade dynamics. For years, the U.S.-China trade war has served as a defining battleground in global economic policy. Initially aimed at addressing long-standing trade imbalances and protecting American intellectual property, the conflict evolved into a high-stakes, tit-for-tat exchange of tariffs that disrupted supply chains, raised costs for businesses and consumers, and strained diplomatic ties. At its height, American tariffs on Chinese imports reached as high as 145% on a range of goods, while China imposed retaliatory levies in equivalent measures. In recent weeks, however, the tenor appears to be shifting. During a recent press briefing, President Trump described the current tariff levels as too high and expressed optimism that they will come down substantially. This statement, combined with signals from other administration officials, has set off speculation that the White House may soon pursue a tiered tariff reduction strategy. Under initial proposals, items not considered a critical national security threat could see tariffs drop to levels between 50% and 65%, while goods deemed strategically significant may still face higher rates, even up to around 1%. The potential for a de-escalation in tariffs has not only energized trade negotiations, but has also had an immediate impact on the financial markets. Following Trump's comments, major stock indices experienced a rally, with tech giants and industrial heavyweights responding positively to the prospect of eased trade tensions. Companies that had been adversely affected by the high tariffs, such as Tesla, have welcomed the news. Even sectors sensitive to uncertainties in global supply chains are beginning to show signs of relief, as investors hope that lower import costs could translate into increased profitability and reduced consumer prices. Experts believe that if the negotiations yield concrete results, consumers may eventually benefit from reduced costs on a range of imported goods, covering electronics, clothing, and even automotive components. However, many caution that the proposed changes remain subject to intensive discussions with Beijing, and that any modifications will need to carefully balance economic relief with the strategic imperatives of U.S. national security. Beyond the immediate economic implications, this potential policy shift carries significant geopolitical weight. For years, the trade war with China has symbolized deeper ideological and strategic divides between two of the world's largest economies. Trump's hint at tariff reductions is being interpreted by many as a signal of a willingness on the part of the U.S. to pursue a more cooperative approach, one that could lead to broader dialogue on contentious issues beyond just tariffs. If implemented, this move might pave the way for an improved bilateral relationship at a time when global challenges such as climate change and pandemics require cooperative solutions. Nevertheless, some observers warn that lowering tariffs too quickly could be viewed by China as a concession, thereby altering the strategic balance in favor of Beijing and potentially emboldening China to assert its interests in other areas. Inside the negotiations, reports indicate that the administration is mulling over a tiered approach to any tariff reductions. Under such a plan, products that are not deemed a threat to national security would benefit from a reduction to more manageable levels, potentially between 50% and 65%. Meanwhile, items considered strategic to America's interests, such as cutting-edge technology and defense-related components, could still face significantly higher levies to maintain leverage during negotiations. This nuanced approach is designed to offer economic relief where possible, while preserving critical protections in key industries. Treasury Secretary Bessent and other senior officials have repeatedly described the current tariff structure as unsustainable. In closed-door meetings with investors and global economic leaders, there has been talk of the need for a calibrated adjustment that could resolve some of the tension without undermining the U.S. longer-term objectives. Meanwhile, the market remains watchful. Every new signal is being scrutinized to gauge how far the administration is willing to go in recalibrating U.S.-China trade relations. Wider international implications. A successful shift in tariff policy might have far-reaching effects beyond the immediate U.S.-China relationship. The ongoing trade war has forced companies around the globe to reconfigure their supply chains, shifted global manufacturing patterns, and contributed to broader economic unease. With the possibility of lower tariffs on the horizon, international businesses are hopeful that stability may finally be restored to global markets. In this scenario, even nations that have been peripheral to the main disputes could benefit from a renewed confidence in international trade protocols. European and Asian markets are particularly attuned to these developments. For instance, investors are keeping a close eye on whether this measure could inspire similar negotiations elsewhere, potentially leading to a wave of tariff adjustments in other high-tension trade disputes. Should the U.S. succeed in de-escalating tensions with China, the move could serve as a precedent for how major economies handle trade imbalances and intellectual property disputes in the future. Expanded final chapter, looking ahead. As we peer into the near future, the final chapter of this unfolding story offers both opportunity and uncertainty. The coming weeks will prove critical as the administration enters into detailed negotiations with Beijing. Market experts predict that if both sides demonstrate flexibility, industry-specific reforms could emerge, setting the stage for a new phase of U.S.-China trade relations. Major sectors, especially high-tech industries that depend on Chinese manufacturing and raw materials, are eagerly waiting for any sign of easing tensions, as even modest tariff reductions could drive down production costs, boost profits, and stimulate further innovation. Investors have already noted the optimistic shift in sentiment, with share prices for some of the Magnificent Seven tech stocks surging in anticipation of a potential reprieve. Yet, as promising as these developments may seem, there is also a cautious note in the air. Economists warn that while lower tariffs might provide immediate economic relief and stabilize supply chains, the broader implications are complex. The tiered approach being contemplated must delicately balance between offering relief and retaining strategic oversight. Any misstep could undermine the U.S. hard-earned leverage over China on issues like intellectual property rights and technology access, matters that have been at the heart of the trade war from its inception. Moreover, the potential policy shift carries symbolic weight in the broader discourse of international relations. For decades, U.S. trade policy has served not only as an economic tool, but also as a statement of national resolve and global leadership. The decision to lower tariffs could be interpreted as a willingness to engage in constructive dialogue and mutual compromise, suggesting a pivot away from confrontation toward diplomacy. However, it also raises challenging questions. Will such a move encourage complacency in addressing other contentious issues? Could it embolden China to leverage economic interdependence in pursuit of more aggressive industrial and geopolitical policies? Within the U.S., debates are intensifying among lawmakers, industry leaders, and policy experts. While many view the potential tariff cuts as a carefully measured step toward repairing economic ties and stimulating growth, others caution that any rollback must be supported by robust mechanisms to monitor compliance and protect vital industries. This internal debate reflects the tightrope that policymakers must walk, offering immediate relief to an economy strained by trade disputes, while ensuring that long-term strategic interests remain unassailable. On the international stage, the ramifications of a shift in U.S.-China trade policy will be closely monitored by global leaders. European allies, in particular, may seize this moment as an opportunity to push for a more balanced international trade framework. There could be renewed calls for multilateral negotiations that address not just bilateral imbalances, but also the systemic issues that have contributed to the emergence of a fragmented global economy. In this context, the potential de-escalation in tariffs might spur a broader rethinking of global trade policies, encouraging more cooperative approaches to conflicts that have long been dominated by unilateral measures. Furthermore, the economic consequences of this move could extend to consumers as well. With tariffs functioning much like a tax on imported goods, a reduction in these duties could eventually lower prices for a variety of products, from consumer electronics and automobiles to everyday household items. For consumers already facing inflation and rising living costs, this change would represent a welcome relief, providing tangible benefits that extend far beyond the corridors of international diplomacy. In summary, the White House's consideration of slashing China tariffs marks a pivotal moment in a protracted trade war, one that has significantly altered the contours of global economics and geopolitical alliances. The potential policy shift offers a glimpse into a future where diplomatic engagement replaces confrontation, where economic pragmatism might pave the way for a more cooperative global trading system. Yet, as the administration signals its willingness to bend its tariff policies, the challenge will lie in ensuring that the concessions do not come at the cost of diminished leverage or a weakened stance on critical strategic issues. Every decision made in the coming weeks will have ripple effects that extend well beyond the immediate trade concerns. Investors, policymakers, and consumers alike will be watching closely, aware that this juncture could redefine the interplay between economic interests and national security, between domestic relief and international responsibility. As both sides prepare to negotiate under these newly signaled terms, the stakes for the U.S. and for the world could not be higher. If you found this in-depth analysis insightful, please take a moment to like the video and subscribe for more updates on global economic trends and international relations. Your thoughts are important to us. Share your perspective in the comments below. Do you believe that a reduction in tariffs will pave the way for lasting stability, or will it simply mark the beginning of a new phase in this complex trade dialogue? Let's continue the conversation as we navigate these challenging times together. Thank you for watching. Stay informed, stay engaged, and remember, every decision made on the global stage has the potential to shape our collective future. Until next time, keep questioning, keep learning, and always strive for a deeper insight into the forces molding our world.